Hey everybody, Smart Silver Stacker here. Welcome to another live stream. What you're looking at here, we're about to play this video. Let's go ahead and start off with this. Is a drone strike on a Russian oil refinery. There's the drone, you can see it, heading towards one of the largest oil refining facilities in Russia. And you can see this drone is not just there to take pictures. No, it is about to blast itself into an incendiary cloud. I believe this is on the condensing tower on this oil refinery. So certainly a significant escalation in this conflict with these drones launched from Ukraine penetrating deep into Russian territory. I see some folks in the chat there saying silver going off. Yeah, price of silver up in a big way today. We're going to talk about that. Price of oil also up, no surprise given the nature of these attacks. Apparently around 70 kamikaze drones were launched across the Russia-Ukraine border to attack Russian energy infrastructure specifically. Dozens of drones, this is from the Kiev Post, confirmed this via other news sources as well as videos on X, or formerly Twitter. Dozens of attack drones swarmed over West Russia on Wednesday to hit infrastructure targets in Kiev's most ambitious air assaults to date against its powerful eastern neighbor. One of the most seriously hit targets appears to be an oil refinery in the Ryazan region, more than 500 kilometers inside Russia, where at least 3 Ukrainian explosives-toting drones crashed into the major oil processing facility early on Wednesday morning, setting a major fire and injuring several people. Crude oil responding to this by rising. You can see earlier in the day, before trading began, oil at a low of around $77, now over $79. Pretty significant in terms of inflation. This is a list of the world's oil exporting countries, and you can see Russia right there, the number 2 exporter of petroleum, just after Saudi Arabia, according to 2022 numbers. And also major refiners of fuels as well, exporters of a number of petrochemicals, natural gas, etc. So supply shocks to global markets may be in order should these attacks continue. So you can expect this to have a big impact on inflation moving forward. One of the significant contributors to a hotter than expected headline CPI report that we just got for February was rising gas prices. Now, there's probably not a lot of Russian oil or Russian gasoline being consumed in the United States. However, you got to understand these are global markets, so an interruption to supply anywhere can affect prices here in the United States and around the world. Another price that was moving significantly higher today was silver, up over $25 now, up about 3.41% on the day. Gold to silver ratio coming down from a high of about 90, and we have the decline to about 86. Now, this is an interesting question, and thank you for that, Jeff. Real quick, this is from today's video sponsor, SD Bullion. That's where we're getting this chart here. They've got some nice sales on gold and silver going on right now. They got junk silver still $1.99 over spot. I view this as one of the best opportunities for stackers out there at the moment. But now, to address Jeff's question, he says, I thought inflation was only caused by the creation of currency. Well, yes and no. So if you look at a dictionary from, I think about 1971 or earlier, interesting, it's around the same time that the dollar's convertibility into gold was ended temporarily by Richard Nixon, still in effect, that temporary suspension. But if you look at a dictionary from around that time, you'll see inflation defined as an expansion of the money supply that results in price rises, price increases. So the inflation was actually defined as the increase in the supply of money. However, if you look at a dictionary from today, what you will see is that inflation is defined as rising prices. So it can become tough to differentiate between the classical definition of inflation, the expansion of the money supply, and I think that that is the more accurate definition of inflation. However, I will sometimes slip into what is kind of common parlance, just referring to rising prices as inflation. And if you think that this muddying of the waters surrounding the term inflation is accidental, then I think you're mistaken. I think it's very intentional that the powers that be, whoever's running the definition of words at the dictionary printers, whoever is doing that, it's very intentional that they change the definition of the word inflation, and it is to give central bankers and politicians an out when it comes to inflation. I mean, you remember Jerome Powell recently sitting on stage during the most recent bout of inflation when inflation was peaking around, according to the official numbers, around 9.1%, something like that in 2022. He said, we now understand how little we understand about inflation. But Jerome Powell and the political elites, they understand that expanding the money supply is the true definition of the word inflation, and that rising prices is simply a side effect there. But however, when it comes to commodities like crude oil, there are supply chain issues that can lead to higher prices, and it's a combination of things. I mean, we've already had a vast amount of currency created over the past decade plus following the great financial crisis. A huge number of dollars have been printed, a phenomenon which continues to this day in the form of massive deficit spending. But when you combine that with supply disruptions due to warfare and attacks on a predominant oil exporter's oil infrastructure, well, then you have a recipe for really high prices. You got less oil because the facilities that produce petroleum products, petroleum refinery, refining that crude oil into gasoline, into diesel fuel, into kerosene, into fuel oil, into all these different compounds that are used to generate energy around the globe. When you see that disrupted, so there's less oil, and then you still have a lot of money being printed, prices are really going to rise in a very big way. It's going to put an already distressed U.S. consumer under a lot of pressure. And today, one of the things that we did see was the U.S. dollar index coming under some pressure. Now, I mean, this appears to be partially what is responsible for the move into silver. You've also got gold retesting its all-time highs. We didn't really look at that chart, but the price of gold also up today, up to 2,184. Again, here from SD Bullion. They've got some nice charts on their site there where we can examine these things. But gold is, I think, showing that its rally is indeed resilient. It's here to stay, coming up following the little pullback we had yesterday. As I mentioned in yesterday's pullback, it was likely to do. I mean, we still might retest the $2,100 level, maybe around $2,050, just slightly below that. That's the level that was resistance for a long time, potentially has now turned to support. And I think that markets are getting an idea of the fact that inflation, both the expansion of the money supply and rising prices, in both sense of the word, it's here to stay. And yeah, Daniel Casey in the chat there, you're quite right. Inflation is another form of taxes. It's a hidden form of taxes. It's the way that all of this deficit spending ultimately is financed. It's not via direct taxation. It's via inflation. And I think if people had any idea how expensive these foreign conflicts really were and how much ultimately we were going to pay for them, they would not support them at all. But instead, you got people putting, Ukrainian flags out in their lawn and all these things, and whatever. I mean, you can pick a side, I guess, if you feel the need to do that. And people might say, quite rightly, that Ukraine's been invaded and they can strike back against Russia. And you can pick sides on this thing, but at the end of the day, the thing that's really going to be important for us is that the price of gas is likely to soar, and the price of everything is going to soar as the price of petroleum goes up as we continue to initiate conflicts with these oil-producing nations, whether it be Russia, Iran, producing something like 2 million barrels a day, largely exporting it to China. But we've had Lindsey Graham calling for attacks by the U.S. military on Iranian oil infrastructure within the past several months. And so, we're continuing to pick fights with these nations which export significant amounts of energy. Iran also can control the Straits of Hormuz there, a strait where something like 20% of global oil production flows through. So this is not just a one-sided thing. I mean, this is on multiple fronts. We're looking at potential massive disruptions to global energy supplies. It seems like it's on purpose. And not a lot was going on today, to be honest with you, except we saw this move in silver. We saw, gold showing some strength, silver catching a nice bid. There wasn't a ton going on except these strikes that I really noticed in the news. So I just wanted to bring those to your attention because I don't know how much coverage they're going to get in the mainstream. One other thing you might not see get covered too much, but which is likely to lead to significant food price inflation in the near future here, is the price of cocoa, which also happens to be exploding in U.S. dollar terms at the moment. This, I think, is kind of going under the radar, and we haven't felt the effects of this yet, and I'll explain why in just a moment. But look at the price chart for cocoa. I mean, look at that exponential move up. Since the end of 2022, it's gone from about $2,300 a ton to over $8,000 today, and it looks like there's no sign of it slowing down. So if you like chocolate, your food bill is probably going to get significantly more expensive in the near future. This is a report on this from Bloomberg. Cocoa topping $7,000, now more than $8,000 a ton, as chocolate makers are set to hike prices and shrink packages. So higher costs here have placed pressure on chocolate makers due to output from top growers in Ivory Coast and Ghana buckling amid adverse weather conditions and structural concerns like aging diseased trees. So, I'm sure they're practicing some fairly non-sustainable agriculture over there. This is a global problem. I mean, it's kind of not really the topic for this video, but I mean, even here in the U.S., our agriculture relies massively on, chemical inputs, pesticides, herbicides, all this stuff. It's completely unsustainable. They've turned the soil from soil into dirt. I mean, we used to have soil, bioactive soil, where you had fungus and bacteria and microorganisms living together. Now it's just like a lifeless matrix that you inject all these chemicals into, and you pull food out of it. And sure, maybe you boosted your output for a while doing that. Ultimately, it's going to lead to huge problems in the ecosystem. But they're starting to see this, it looks like, in Africa. Arrivals at Ivory Coast ports of cocoa still around 30% below year-ago levels. So supply here taking a huge hit when it comes to this cocoa situation. And the situation has prompted chocolate makers like Hershey Corporation to hike prices, shrink packages, and push new products that use less cocoa. So expect more shrinkflation there. Again, I'm sure it's not just the input costs for Hershey Corp. Yes, the cocoa is getting more expensive. So is the cost of energy, so is the cost of labor, so is the cost of insurance. I mean, everything is rising in cost. So, this is one of those examples of how these things don't really show up in the official numbers. They're shrinking their packages, they're reducing the quality, they're using less cocoa in their products. So it's not the same products you were buying before. So maybe the price hasn't increased dramatically, but the quality has declined. Those sorts of market events do not get captured in the official CPI. And there's a lot of ways they cook those numbers, but this is one that really does not get reflected. And so, when you see you have a 3.8% core year-over-year CPI, that is not telling the whole story by a long shot. Not only are the numbers, the inputs they're using skewed, but then also things like this completely get disregarded. And now here's an important aspect that they mentioned in this Bloomberg report. While hedging and physical stockpiles currently provide a buffer, chocolatiers' costs and then consumer prices are set to inflate. So there are stockpiles of cocoa right now, warehouses of it that haven't been depleted yet. Some of these companies have hedges in place to protect themselves from rising costs, but that is now going to wear thin. And over the next 6 to 12 months, prices are going to rise. That is according to Bloomberg intelligent analysts, who say that volume losses in cocoa could continue into 2025. So this is a problem that's going to be a big problem. Anyway, that's about it, folks, for you today. Rising costs for energy, rising costs for oil, rising costs for food, and probably, I would imagine, rising costs for gold and silver, especially. I think gold and silver are going to really begin to accelerate once the impacts of all of these inflation and supply chain disruptions become clear to U.S. consumers who have been lied to. I mean, the U.S. populace, there's all this tremendous amount of economic propaganda in the mainstream media telling us that inflation is under control, it's coming down. I mean, the only thing that's happened possibly is that the rate at which prices are inflating has deaccelerated. It's not like inflation ever stopped, and this is all cumulative. So, the cost to live today is massively more expensive than it was just a few years ago, and that is not going to change. In fact, the problem is going to get much worse. Eventually, I think investors are going to get the memo, the public at large, and they're going to want to protect their purchasing power any way they can. Are they going to go out and buy Bitcoin? Well, maybe. To the extent that they are tuned into that financial media. But I have a suspicion that eventually people are going to become a little bit disillusioned with that as well. And I think that then, a lot of that cash, even if a small amount of it moves into physical gold and silver, there's not that much of the stuff to go around. And we're going to see some big price movement there. But anyway, that's all I got for you today, folks. Stay safe and happy stacking. Appreciate everybody who supports the channel with a like and a thumbs up, sharing the video with your friends on social media. Please continue to do all of that. I deeply appreciate all of the support. And that's it. Stay safe and happy stacking, everybody. I'll catch you next time. Smart Silver Stacker, out.